In this video, I will be speaking about USD CAD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, and by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which has just created a very strong impulse to the upside, followed by this correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a market which is currently testing exactly the 50% retracement taken on this monthly impulse, which is also lining up perfectly with this previous resistance turn support, creating a confluence of support in this area, which we could expect this market to test and then to reject to the upside, which is exactly what we see the market currently doing. It already tested this zone 3 times and is currently rejecting it to the upside quite aggressively. Dropping down on the weekly time frame, what do we have? Well, from a weekly perspective, we can see a very strong overextended M pattern, and in general, after the creation of an overextended M pattern, you would like to see a rejection to the upside. And in fact, we can see that is exactly what the market is currently doing, and we could expect more bullish price action to be printed away from this zone. Going down the daily time frame, things get even more interesting. In fact, on the daily, if we follow the pattern, we can see an impulse, correction, lower low, move to the upside, correction, continuation to the upside. This essentially creates a W formation inside of a potential inverted head and shoulders. In fact, the W formation is from here, down, up, and the inverted head and shoulders is the potential pattern that the market could create if from here the W formation gets completed. Essentially, we would have the left shoulder here, head here, and right shoulder here. So left shoulder here, head here, and right shoulder here. So from a daily perspective, it seems like the market has good probabilities of showing first some short-term bearish price action and then longer-term bullish continuation. Now this is exactly what we need for seeing first a completion of the W and then the bullish continuation, because we need short-term strong CAD and then a long-term weak CAD in order to see these two moves. So what this means is that we could expect some short-term bearish price action and then longer-term bullish continuation. So how we could be approaching these potential moves. Now, let's approach one at a time. First, we would like to see a potential rejection to the downside. So how we could potentially be approaching this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the downside for the completion of the W formation at the neckline. Now, if you enjoyed this free analysis education and update, make sure that you drop a like in a comment. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.